Good evening. I am Dr. N. Saraswati, Assistant Professor of Commerce, Annathramaya Nankar College. Today we discuss the topic name is Factors Influencing Investment Decision. The factors influencing investment decision influencing so many factors. Now we see about the first factors, risk tolerance. This is one of the major factors in the investment decision making process. It refers to how comfortable an individual is with the possibility of losing money. People often believe that risk tolerance only considers how comfortable a person is with the possibility of losing money, but that is not the only factor that defines it. Other factors such as age, financial situation, and stability, income, investment goals also influence how much risk a person can take. Then now we see about second factors, market conditions. Factors such as interest rates, stock market trends, inflation, and the national and the geopolitical events like wars influence how the market performs. These conditions can impact investment returns, risk, and opportunities. For example, a high inflation rate will lower your real rate of return. Similarly, changes in interest rate affects the cost of borrowing and thus the activeness of different fixed instrument investment options. Now see the third in factors, investment goals. Financial goals drive our investment decisions. Generally, these goals are divided into three parts, long, mid and short-term goals. We select investments option that align with financial goals like saving for retirement, buying a house or funding children's education. Now fourth factor is financial situation. Your financial situation is defined by how much you earn, your expenses, how much you have saved, ongoing investments and any outstanding debts. One can only invest according to their current financial situation. Take for an example, a person who is burned with debt would need to prioritize paying off their debt before making new investment. In contrast, someone with a stable income, saving and minimal debt would have more freedom to explore different investment options. Time or horizon. Time or investment horizon means how long you plan to hold an investment before you would actually need the funds. Individuals investing with a long-term mindset can take on more risk and investment in attractive options such as equity funds. Those with a shorter time horizon might prefer safer investment with more liquidity like debt funds. Diversification. To diversify means to spread investments across different types of assets and industries to minimize risk. When making investment decisions, it is important to include a mix of asset classes such as stock, fund, bonds and mutual funds. Invest in various sectors. This way, if any losses made in a poor investment can be offset by gains in another. Now, tax implications. Tax rules are often different for different investment options. While some investments are heavily taxed, some even offer advantages like ELSS or PPF. Tax can significantly impact your investment's real rate of return. So, understanding the tax implication of your investment helps you maximize your after-tax returns and even reduces your taxable income. Interest rates. Interest rates generally impact fixed income investments options like bonds and liquid funds the most. When the interest rate rises, the value of existing debt instruments can decrease, and when the rates fall, they can increase their value. Economic outlook. The country GDP growth, employment trends, inflation rates and other economic metrics also affect the market and the investment decisions. If the economic outlook is positive, investors can be encouraged to make more aggressive investments. So these factors are influence to investment anyone. These are all factors consider the individual or business peoples, like they want to invest the amount for particular sector. They considers these are all the important concepts: rate of interest and return, or tax implications, and so on. Concepts are most important. So every investors has influenced. These are all factors. So I conclude these concepts. These are all factors are influence on investments. Now next class we have to discuss some another one concept. Thank you.